If you feel like you missed out on the butt of Nvidia's huge stock gains, don't worry about it because I even have something better for you. Today, I'm going to show you 2 copper stocks and 1 copper ETF that will make Nvidia's investors super jealous. Now, I know you might be thinking, copper? Are you serious, Valentine? But I'm like, yes, these are companies that are showing growth that is even huger than those big AI companies that you're seeing. And while people are crying over old news, smart investors are starting to move into such stocks. In this video, I will show you why these copper companies are even better than AI companies out there. I will show you the clear signs that I look for in companies to know that they're going to jump up. And I will also be showing you how you can hugely profit from these copper stocks while others are still chasing old news. In this video, I'm using the same strategy that I used recently on Tesla, and the viewers of this channel saw a 30% return in just 4 days. That happened just last week. But that's not all. If you sign up for my newsletter in the description below, I will share with you my most profitable stock strategy. Beginners and professionals can use this strategy. It is a strategy that helped me make a 70% profit in HIM stock in only 2 weeks. Don't let that chance slip away. Sign up to the newsletter, get that free lesson, and go through it. Subscribe to the channel and turn on your notifications because I release these videos a day before the stock market opens so that you can profit in time. The first important fact is that companies are greatly affected by their stock sector. 75% of companies will follow the stock industry. So we always want to make sure that the industry is going up. So we do that by looking at the copper industry. We can see here, if we type in a copper stock like HBM, we can see that when the industry is moving up, this is the industry chart up here, the stock is going to move up. When the industry is moving down, the stock will go down. Currently, the industry is starting to trend up, and that is a good sign for copper stocks. So the industry is checked. The next thing that we do is to look at the weekly chart. So here I have a 4-day chart and I have a daily chart. So you want to see the bigger time frame first before going into the daily time frame. Our first stock that I really like is a stock called HBM. This is the first stock, and I'll be showing you another stock that might even be better, and the ETF I'll show you later on. What are we seeing on the weekly chart? The first thing that we see on a weekly chart is something called a cup and handle. Cup and handle is this signal here, and we see a huge breakout. And great investors know that whenever a stock jumps out of a huge base or a huge consolidation like this, it has to correct at least 20% before it has finished its move. So the first time to buy was to buy the stock at about $5.5, and it almost doubled up to $10. And then we wait for it to retrace to the 50-day moving average. If I put the moving averages here, you can see it came down to the 50-day moving average. And the 50-day moving average is still sloping up. That means that the trend is very strong. This is the first correction that we expect. This stock is not yet finished. So after that huge cup and handle, it makes a huge move, comes to the 50-day moving average. We can see that there is some tight action here. And then when you look at the volume down here, the volume has greatly diminished. So when the volume diminishes in tight action, that means that the sellers have been extinguished. There are very few sellers. And what do we see next? The stock jumps up on the next day. I think it jumped up about 2%. That's when I bought it. I bought it around $9.4. The stop for this stock was about 2%, which is a very good stop. It jumps out of there, and this is still a buy. You know, it's not yet out of the territory. So if you're buying it on Monday, I would say that you can put your stock to be about maybe 5%. That is a very small stock. Just put it to be about 9.3, because we don't want it to fill that gap. If it fills that gap, something is wrong. So HBM is my first pick. I'm going to show you the other picks later. What else are we seeing in the stock that is nice? A good stock must have good fundamentals. And HBM, you can see its growth, its earnings per share for the last 3 quarters have been growing even bigger than AI companies. It's been growing at about 500, 200%, 200%, twice it did 200%, and one time it did 500%. Anything that is above 30% earnings per share growth, anything above 30% in the last 4 quarters, or in the last 2 quarters, anything above 50%, that is great. And this company is blowing that out of the water. Revenue, if you see revenue, which is about 15% average for the last 4 quarters, that is great. But this company is blowing that out of the water. It's selling 45%, 96%, 78%, way bigger than what a great company normally does. That's why it is a great buy. Now, on to the next stock that I really like. Do I like it more than this stock? We're not sure, actually. I will tell you at the end of the video. The next stock is TGB, Taseko Mines. So all companies move together. Since copper stocks are moving, we can't expect one company to be moving. All of the copper companies are going to be moving together. It's an industry move. So here we can see the same thing that happened in the other stock. From something like a cup and handle here, and it gapped up. It went up about, let's check. This stock went up about 90% already. We also know that these big stock moves never finish unless the stock has had at least a 20% correction. And this is the first correction to the 50-day moving average. And the 50-day moving average, as we can see, is still sloping up. So that is a good signal. If you want to know if a stock has great fundamentals, it must have 2 of 3 things. It must have strong revenue, super earnings per shares, or super return on equity. A super return on equity, anything above 17% is super. Taseko Mines has that. I told you for earnings per shares already, anything above 30% for the last 4 quarters, and I'm talking about year over year, that is magnificent. Taseko Mines has that too. Look at this. 200%, 100%, 3,000%. What are we waiting for? We should have bought this thing already. We should have already been having that 90%. And if you didn't have that 90%, it's because you're not signed up to the newsletter. So sign up for that. Look at the revenue. Anything above 15% for the last 4 quarters is amazing. And we can see it has 25, 60, 63, 28. This company, the fundamentals are great. Technicals are looking great. So what are we seeing here on this chart? There's some sneaky signals that many people might not see. The first thing that we are seeing is something called a double bottom, right? So it comes, corrects here, fakes a move up, and comes and bounces off this line of support. But then it cuts under just a little bit. So you see this kind of cutting under. This is something called a fake out. So they try to fake people by pushing the stock down so that people who are not really believing in the company can sell, so that they can buy the company for themselves at lower prices. And what happened right after that checkup? We can see that the company then just jumped up the next day. So there were people who were forcing the stock down so that they could buy it for themselves. So these are signs that you have to look for. And of course, I want you to watch all of my videos because every stock might be having different signs. But if you watch so many of these videos, you start to learn these tricks. We want to see a base on the weekly chart that it's at least 4 weeks. Anything less than 4 weeks can't be trusted. We can see this has taken more than 4 weeks. This is what we call a cheat. So what is a cheat? You see the stock is having tight action. On the weekly chart, we can just see the bars are just close together. On the daily chart, we can see that the stock is correcting, but it's not correcting as much as it did. Because here, it corrected about 29%. Then here, it corrects about just 10%. So it does a very small correction, and it does a correction on very low volume. These orange bars that you see down here, that means that the volume was very low. Actually, if you see the volume here, that negative 50, it shows that the volume was 50% less than the average. So here in the cheat, there was very low volume, right? And then it jumps out on the cheat on volume. So this is an amazing buy. How would we buy this thing? I would say since it gapped up on that day, we can see that gap right there. Put a stop loss of about 5%. It shouldn't come back and cover that gap. 5%, where is it likely to go? To predict the stocks, one thing you can do is use this 1.5 times the average true range of the last 14 days. Just put in this number 6.91, 6.9. Okay, let's just use 6.77, smaller, a bit more conservative. I saw that the first goal is that the stock would normally do about 5 to 6 times that value. So I'd say aim for about 3.5, 30% return. A good resistance to look out for is here. So we shall wait to see how the stock does around $3.1 because it could just come and then fail at this price. So we have to watch out for this line of resistance, see how it reacts here. If it fails, then you can just be happy with your 20%. But if it succeeds, then maybe you could go on to make 30% with a very tight loss. Our loss was going to be about 4 to 5%, like we already spoke about. Buy there, here would be about 4 to 1 risk to reward ratio, which is amazing. This would be about 8 to 1. So those are great. If you really don't want to be confused about which stock to buy, just get the ETF. The ETF combines those multiple stocks, so we can see a combination of all of those stocks in the ETF. We can see the tight price action with very little volume. Jumps out, that was a good time to buy if you missed it, but that's okay. If you missed it, don't get sad. You can still buy again. Of course, your stop would now be about 3.5%, which is very small. If you have $1,000, you're going to lose only $35 if things go bad. But if things go well, we spoke about it, you can go for about 20% to predict. Put 3.8%. Yeah, can predict about times 5 movement. That's good. So about 19%, for about a 3% risk. So I think that's a good risk to reward ratio. My first choice in these stocks is HBM. That is because it has the greatest revenue. My second best choice is TGB. I prefer choosing these best stocks to the ETF because they outperform the ETF. If we look at HBM, when it broke out the first time, it did 80%. TGB did 100%, 90%, while the ETF did only about, from the same time, I would say around here, did about 35%. So very different from that 90% and 80% that we saw, but it is a safer choice, but you get a smaller reward. So choose your poison. I hope you enjoyed the video. Check out the other videos on my channel. And of course, sign up for the newsletter where I'll be sharing the top tips from experts in the stock market and also ideas from my 4 years of experience in the stock market. And I can't wait to share them. May the markets be with you. Thank you.